Hey, good morning, everyone. Happy Saturday. It's 7:30 a.m., April 11th, and price of Bitcoin currently at 68.79. Looks like we haven't seen a whole lot of movement overnight, really just chopping around in this particular area. This is, remember, a key support area from this consolidation period before we broke up. So this is technically still support. Okay, sorry about that. This area right here that we're in right now, this is technically still support. Okay, however, all right, usually when I like to see support being hit, it's usually just a one hit and then you just start moving back away, right? So far, BTC has been pretty good about hitting support multiple times and then moving away. So it's very possible that if you look over here, that this previous area was resistance, right? On the way up, and it pulls back, shoots up, and then it tests that support, 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 and then bounces away. So lately, Bitcoin has not been as predictive about how it wants to test support as it used to be. Because it used to be, one touch, two touch with a higher low often, and then it starts moving away, okay? But the last couple of times it's done something really interesting, which is it breaks down towards support, hits it multiple times, and then starts, either pushing back up or breaking down. So even in this particular case right here, you can see it tests support right there once, twice, and then breaks down, okay? So two touches for the most part have been pretty common for Bitcoin. So that's something else that I've noticed is, this is a big test of support right there. That's another test, and then it pushes back up. Over here, test of support, and then it breaks down. So the chances of testing support twice are 50-50. On the second touch, you don't really know which way the price is going to go. However, there are other reasons why we can talk about price being bullish or bearish, okay? So in today's video, I'm going to talk about 3 reasons why I am particularly bearish, okay? So let's go to reason number 1, all right? Number 1, let's look at price action, okay? So price action from a 4-hour standpoint, all right? So remember that, this was the key high of price, all right, on April 2nd. We put in this high, and we got, sent back down pretty hard. And then, we tested that support multiple times and then pushed up, right, all the way to about 74.50 or so, okay? And then we kind of just meandered up and down around this area. And then finally, if you look closely at this marker right here, 72.99, okay, notice that there were not 2 consecutive 4-hour candles that closed under that marker, okay, until this point before it broke down, okay? Look closely, all right? Over here, we see one candle that closes, this red one, but then the next one closes above. Over here, this red candle again closes slightly below, but then the green candle closes above, okay? Only over here, we can make the argument that the red candle finally closed below that 72.99, and then the green candle failed to close above 72.99, and then the following candles right here, as you can see, definitely were not able to close above 72.99, and that led to the next, big wave of the sell-off. Okay, so this is one of my reasonings for number 1, I'm bearish, along with other technicals associated with that. Okay, other than that, this yearly open right here, 71.65. Okay, key area right there that was supposed to be resistance on the way up. It sort of was a little bit right there, but then it broke up, tested support, and then finally broke down, okay? So now that the fact that we're under that yearly open right now, it's a good bearish indication that it looks like the bears have stepped up, okay? And on top of that, we could also make the argument that we've broken down from this big ascending channel, something that we've been in for the last, let's see, I think 3 or 4 weeks. Let's say from here all the way to over here, 27 days, as you can see. Okay, so we've been in this channel for 27 days. And if you've been watching my videos for the past few times, you've noticed that I've said that if we stay at the bottom half of this channel right here, just like, we were up at the top half earlier, staying at the bottom half is bearish, but, obviously that didn't mean anything because even if I was bearish, price still kept moving up in the bottom half of this channel. But eventually, it broke down, right? Another reason within the technicals itself is if you look at this particular high, the one that we put in, after this big move up, right? That was 69.46 or so. Okay, that's that marker right there. Notice, okay, that was the key area. Once we smash down, we have not been able to close above on a 4-hour time frame. Okay, so this is why when you mark out levels, start looking at where exactly are the 4-hour candles closing. Okay, you can even look at 1 hour, but sometimes 4-hour helps, sometimes 6-hour helps. Okay, sometimes even the daily markers help. Okay, but in this particular case, you can see closely, just like over here, right, where we could not get above 72.99. We're not able to close above here, which is 69.46. So again, like I said, one of the reasons why I'm bearish based on these technicals, right? Number two, okay, let's look at how the term structure is for futures, okay? So for those of you who are not familiar with backwardation and contango, which relate to spot prices in the current term versus future prices in the shorter term as well as the longer term, you can see the BTC June 20th futures went into backwardation. That essentially means that spot price is higher right now than the futures price for the June 20 futures contract. Okay, so that means that if the future itself, the futures prices are saying that, hey, we're valuing Bitcoin's price a little bit lower than the current, present day spot price, that means that, the futures traders are thinking that in the few weeks, the months ahead, we might see maybe a decline in the price action, okay, or rather in the price. Not maybe that's just, the supply that's out there. Maybe they're expecting more people selling. Maybe they think that the price of Bitcoin currently is a bit too overvalued. But this, again, happened even after we sold off $200-300, right? So you could see after the recent sell-off, right, BTC June 20th futures went into backwardation. So it's not like prices were up here and then June 20th futures went into backwardation. It's even when we came down here, we're still in backwardation. So the prices of the backwardation futures for June 20th are still projecting that we could be seeing more downside. Again, that doesn't necessarily mean that we will see downside. It's just how traders trade. They're expecting, more downside. Okay, it's the same way like traders predict, we're gonna possibly go lower in the stock market, or we're in a bear market still in Bitcoin or whatever, right? But you have to take those statistics into account of how the term structures are, because sometimes the traders on the futures markets or the options market are very, very smart and astute traders. Okay, so when you see data like this coming out, it's very smart to actually pay attention. Okay, so obviously this is my second reasoning for why I believe Bitcoin is bearish, along with that particular chart. Okay, this is something that's interesting too. Okay, if you go to this token analyst website right here, all right, I like to look at Bitfinex and Binance and BitMax. Okay, because Bitfinex has the highest volume, at least quote unquote real volume. And there was some data on this by our friend, the whale Joe, and he stated that there's a good amount of data why bigger players in the market utilize Bitfinex as the exchange to get in and out of the markets. Okay, Bitcoin market, that is. Now, if we're looking at Bitcoin and the Bitfinex exchange specifically, one thing that you'll notice is the outflows. Okay, right there. Look how the outflows are doing. They're going up. The inflows are coming down. So what does that say? Well, that tells me as a trader that it looks like more and more people are selling or getting out of the market, and less people are interested in getting into the market, and that's Bitcoin. Okay, so this could be particularly the BTC USDT pair, but overall, we're also seeing heavy stablecoin as well as fiat that's actually just sitting there dormant on exchanges. And this was a report that was put out, I think by Coinbase, and I think it's somewhere on my Twitter as well. The stable coin as well as the fiat on exchanges has been some of the highest value in the past few months or few years. Okay, so that means more and more players are sidelined. I mean, who knows? You know, they might be getting in, trying to get in at a better price, which I don't know if that means like, you know, if price is going to push higher, then they'll get in, or if it's going to push lower, they're expecting lower prices and then they might get in. We don't know. Okay. But for now, okay, and this is where my third reasoning comes in for why I'm still bearish. Okay. If you go to my Cryptosomniac trading view right here, you'll see a couple of different articles, or not articles, I guess my posts that I put up about how I personally believe that we're still in for another leg down in the stock market. Okay, so this is where the third reasoning comes from, is the equity markets. Okay, here's something a lot of people don't understand. All right, I know that the current administration, or even, you know, mainstream media headlines are starting to write out, oh my God, you know, we've had the best week in the stock market since like the 80s or the 30s, or some garbage like that. Okay, the reason you have these phenomenal weeks in the stock market is because this is what happens in the bear rallies. Okay, you think you're out of the woods, but really you're just about to get started in terms of another big leg down. Okay, so bear market rallies. So obviously you can see right here. Okay, this was the current week. Okay, so the last 4 days, right? We've moved up. Actually, we move up from the previous week, so it'd be right there. Oops, right there. So we moved up almost 12 or 13%, you know, in the entire week. All right, which was this week. And so you're probably thinking, oh my God, this is great. You know, I get to get into the stock market when it's only up, you know, 10, 20% from the bottom. Not the case, okay? Now here's some interesting data to sort of back that up, okay? If you read from Jeffrey Ross right here, all right? He manages his own hedge fund. He said, you know, headline from the Wall Street Journal newspaper, okay? S&P enjoys its best week in decades. You know, don't miss the irony in its enthusiastic headline and the associated bar graph. The other 8 best weeks occurred during the Great Depression. This is the funniest part, okay? So you're effectively comparing today's bear market rally to another bear market rally that happened in the 1930s Great Depression. So you can see how sad it is that people don't do the relative data comparison of when were the other bear market rallies, which were seemingly bull market, but in reality, they were part of a larger move that was ultimately heading down. Okay. Now, if you're an Elliott wave fan, right, we can even look at this as an Elliott wave count. We could say, all right, well, on the way down, this is, you know, wave 1, 2, big move down, 3, 4, and then 5. Okay. So if we're looking at wave 5 down, where does that come out to? Well, we can, you know, put some retracements on there. Okay. We can do some extensions on the retracements. Okay. So if, let's just say this was the top of the 4th right there, right? Wherever we ended. Okay. The 5th wave, if we're expecting just a 1.618 extension down. Okay. And sometimes, again, folks, you know, sometimes the extensions are pretty aggressive. They're much, you know, deeper, but we're just saying, you know, let's just say just a 1.618 extension down, right? We're looking at 1,800 points. Time-wise, I have no idea, but we're looking at effectively 1,800 points based on the extension between wave 3 and wave 4. And that means wave 5 is projected out to be 1.618. Okay, so 1,800 points from where we are today. So say you bought in today, okay, into the stock market. As per the index, you're down another 35%, which means stocks themselves, depending on which stock you buy into, could be down at least 30 to 35%, if not 50 to 70%. Okay, it depends how bad your sector gets hit, you know. So the point is, read into the headlines and try to understand, well, what do they mean by, you know, this is the best week in the stock market? Well, when were the other best weeks, right? This is why these headlines, I really dislike them so much, because people don't know how to do the comparison of the markets when we're the other you know, best weeks in the market, right? And the sad reality is, here's another picture that I put up the other day. Okay, here's America in one picture. All right, everything wrong with America. You know, Justin put up this picture, right? The Dow's best week since 1938. And then at the same time, you have a headline of more than 16 million Americans have lost their jobs in 3 weeks. That's not stopping anytime soon, by the way. Okay. So you could see that the stock market was completely disconnected from the reality of what's going on in the real economy. Okay. So in this particular instance, the fact that the market was going up didn't mean shit. It's not like, companies are hiring. It's not like people are losing less jobs. People are losing more jobs, and the real economy is actually taking an impact. Now, here's my guess is what I think is happening. This is, again, like I said, a bear market rally, right? We might be in the midst of that, movement up, distribution, and then potentially setting ourselves up for that next big leg down, okay? This is the area where institutions and smart players get out at a somewhat of a discount of, instead of losing on selling way down here at the bottom, now they're only selling maybe at a 16, 17% loss versus they would have sold down here around 34, 35%. Okay. These bear market rallies really are the essence of, understanding that, okay, there's more to come. Okay. So again, I could be wrong, right? Okay, from here we could just start pushing up, but what are the technicals that are stopping me? Number one, we're right under the 50 fib and we closed under it. Number two, this was previous support, now turned into resistance. Okay, so you can see for the most part, the technicals are supporting us. The statistical data from the economy is starting to support us. Okay, here's another thing, right? Just yesterday, okay, US deaths surpassed 2,000. Now, here's my take on that. Okay, I personally think that the stock market has effectively factored in, how bad things could get due to COVID, but it has not factored in how bad things could get in terms of once we see the wreckage of what the virus has done on the economy, how many companies might go bankrupt, how long it will take for the economy to come back, to 100%, et cetera. Okay. So point is, the Fed is doing whatever it takes to backstop the slide in the market, but you can only do so much and you can only print so much. Remember, the market is bigger than anything else, okay? It doesn't matter how powerful of a weapon you have in terms of the Fed printing money. It doesn't matter. It's still a drop in the bucket of what's happening in the bond markets, the equity markets, So point is that and even the Forex markets, the Forex markets are $5 trillion a day volume market. The bond markets are sized up to 125 trillion or something. Let's look that up, right? How big are the bond markets? Okay, look at that, 100.13 trillion. That would take, essentially the US printing or pushing in money into the markets pretty much every single day for like a month. Okay, it's just not possible. And here's the thing, that's actually happened. The scare is actually happening in the bond markets, the biggest markets, okay, which is that the Fed is essentially buying up junk bonds, meaning companies that are really shitty managed companies with bad balance sheets and bad books. And we're effectively trying to stop them because they know that once those junk bonds really cannot be sold, then you're going to start seeing bankruptcies, then you're going to start seeing more people unemployed. No one's going to want to buy those bonds. So effectively, the Fed, which never really used to touch those junk bonds, is now starting to buy those junk bonds. So they may seemingly be doing, something right in their own minds, but in reality, they're hurting the market for the long term. And, a lot of the smarter investors are calling BS on the Fed, and they're saying, you cannot stop this, boat that's about to sink. Okay. And what I mean by that is, again, I don't mean America is going to go to zero or anything. I just mean that the stock market needs to correct itself a little bit lower. And if the Fed actually did let the economy and capitalism sort of run its free market way, we wouldn't have to deal with, these massive bear market rallies and then more pain to the downside. Okay. We would have had maybe a pop up of, 5, 10% and then made another move down. We would have been effectively out of this loop of the bear market maybe in a couple months. But now what the Fed has done is effectively delayed that. Again, I know they're trying to stop it, what seems to be the thing that they want to do to save Americans, to save the economy, but in reality, they're actually making it worse. Okay, so the point is, how does this relate back to crypto, right? Same thing, okay? If you believe that Bitcoin has been following the stock market, okay, which again it has been, right? For the most part, if you believe that this is pretty much the cycle top, Bitcoin itself, has broken key support levels like the yearly open, the 72.99 marker, the 69.46. We should be expecting more downside. So, those are my three reasons, right? The technicals, what I gave you, the futures of currently us being in backwardation. Number three, the real economy, as well as what's happening in the bond markets, and the stock market technicals. So those are my reasons, folks. I am still bearish. All right. I'm only looking for shorts in Bitcoin. I'm still positioned short and bearish in my equities positions, all of which you can get to know in our Advantage membership. Again, we're going to hike up the prices soon, folks. So come join and you'll get grandfathered in at $97 per month. All right, you won't have to pay the $125 starting May 5th. So make sure you come join. We have Forex analysis, options, oil, equities, and of course, crypto, okay? So come join, trade with us, because this is going to be one of the best times for you to learn and grow, because the market is going to be so volatile. You'll never see a time like this where you're going to learn more about the market by seeing it, in its reality of what's happening than you ever did in the bull market phase. Okay, the true face of the market and the true face of the economy really comes alive in bear markets. Okay, and you get to learn a lot. All right, so come join, learn with us. Again, join at a discounted price. All right. But that's it. Okay, those are my thoughts on why I'm personally still bearish on Bitcoin. Okay. By the way, our link short right here went perfectly as well. We took a trade right there around 325 all the way up to 345, and sold off right here around 303 or 304. So that was a perfect trade. We got out right here at the bottom before this thing pumped back up. All right. That's it. All right, y'all take care. Come join Cryptosomniac Advantage, and I'll catch up with y'all soon. All right, cheers.